Well, good morning everybody. Welcome to Stockradar Stocks on the Move for another week. Today's date is the 23rd of January 2025. My name is Richard Lee and I manage the stockradar.com.au website for you. Well, highs at topple. We love highs at topple because they lead to good rallies. So I've got a bit to get through today. I'm excited about these times because they're great opportunities for us all to make some money, and we must in these times. It's really important we do that, okay? I'm happy covering my top 200 stocks. There are plenty of big gainers in those top 200 stocks. That's my playing field. That's where I make my money. There are plenty of big wins for us to capture in this market here at the moment. So I'm talking about the Pareto principle today. I've gone through this before. It's really about 80% of your profits will be generated by 20% of your trades. Trades as it may seem, but that's why we need to focus on what we're doing and those big trends and make sure we maximise them, which is what we're doing at the moment in this market because there's some great trends. So when you are on a good trend, you stick to it and don't give it away unnecessarily. Okay, so let's go to the top to the trend intensity ratings. Firstly, we've got AMP Zoom to the top, so it's a new stock that's been trending well. CMM and GMD are still doing well. Hub's a new entry. IAG is an eternal one. JBH is knocking on $100. MQG starting to move higher again. Origin's making new highs, and PME and Qantas are the incumbents making good trends, and we'll have a look at one of those a bit later on. So AMP, as you can see here, shot ahead again. Surprise, surprise, but it started a nice trend in this accumulation phase here, this nice little trend for here, and then once we broke through this area up around 140, it was a nice opportunity for us to jump on this trend and follow it higher. And we've got some nice volume through here, some nice momentum above the average, and some nice price advantages. So there you go. AMP, surprise, surprise, is back on track. Okay, so that's the top 10 ratings. Stockradar stock pick count. So I've got my numbers all sorted out a bit today. So I now cover 140 items, of which I cover 158 stocks and 26 ETFs. So of those 158 stocks, there are 42 trending, and of the ETFs, there are 13 trending of 26. Okay, so our market is flat at 55. We've lost one this week. We're not really going anywhere significantly as far as breadth grows, but there are plenty of opportunities there in our market, especially those 42 stock picks. Okay, so let's have a look at the overseas markets now, see what's going on there. Again, trends are trends, and trends are going on and on and on. And these are pretty remarkable trends. You know, last year we had great gains. This year we're having good gains. It really has been extraordinary times. And bounce back, we have the Dow Jones is back at its highs again and testing them. Not much happened on the market last night. A little bit of easing, I think, but we're still up there. We've got some good great vote buying come back into this market again, and volume and momentum has steadied off. So it looks nice there. The Nasdaq again, it's up at its highs again. Okay, it didn't even come back to its support area before the buyers came back onto it. S&P is back up its highs again. So the trends are all intact overseas. They all look fine. No problem at this stage, which bears well for our market, which is, the US market's focused as well on those tech stocks. We're focused on the banks and the financials, but we are making highs at the moment. We'll be probably off a little bit today, but the market still looks good, trending higher nicely, above the average, above the trend line. Momentum's positive, so all those indices are there in support of the markets. Commodities, well, gold is smashing it again. It's got through its highs again, looking higher. There's plenty of buying down here, so it looks good. So if you do have any gold stocks, probably hang on to them at the moment. So they're doing well. Copper, nothing really much to add there. It's just come back a bit this week, still chopping about in our big picture which we really like here. So we're going to have to wait a long time for this to come off, but still, when it does, that's going to be the big opportunity that says copper is back on its run again, because we're all a bit surprised about what copper's doing. Hasn't really gone anywhere for a few years, but there will be a big breakout at some stage. And when it comes, we'll be right on that for sure. Brent crude, well, it's trying to break the downside by the look of it. Still, we've got this downtrending move here. It's fairly solid there. Every rally is getting knocked on its head, but still the S1 hand support holds down to about 70 US basis Brent. So we had a bit of a wave of buying here, so it might be the start of something. We might see S1 hold again and have another rally, but for this stage, we've just got a little bit of an early warning sign that some buyers appearing down there. Momentum's still weak, but the pressures are easing there as this holds for longer. But the market really has shown no desire to go up. It's just going really sideways and getting punched into that little corner there. So the pressure is still down on Brent crude. Okay, now, so that's the overseas markets. We're going to go to some stocks now. I'm talking about new highs. That's what I really want to talk about because it's what's happening at the moment. I remember back in 2003, 2006 when the market was running on just new highs after new highs, and that's what the stock market does. When it makes new highs, it goes higher because it trends higher most of the time. So we're always looking for opportunities for you for new highs and trend reversals, but also to protect what we've got, which is also important. So it's not just for thinking about buying, but you also got to think about the selling side. Remember the adage, know what to buy, know why you buy and you'll know what to buy, know why you sell and you know what to sell. Makes your life a whole lot easier. Okay, so last week we had some good stocks there, which we looked at. This week we've got a few stocks that are tending to make new highs. I'll talk about ARM, ResMed, possibly Telstra, both sort of hovering there. ResMed's looking a bit of a gainer. The one that I still like again is Coles. It's nudging higher and higher and higher, trying to get through those highs. Just zoom that up a little bit. We can just see this big high up here. We're trying to get through. We've got a good trend developing here, whether it really confirms itself. So all I'm doing is I'm just waiting for a confirmation for myself of a new high. I just take two signals. I'm not concerned about what's happening here in this trading range. It will do what it does, but if it does break through, I will be interested. It is looking good. Trend intensity rating is +1. Volume here, you can see lots of nice green bars through here pushing on this trend here, which is a good sign. And then also we've got above the average, and momentum's also positive there. So that's what Coles looks like. I'm just going to quickly zoom across to Woolworths for a second, and we can see what's happening here. And this is Woolworths chart, and it's gone completely the other way. So go figure, something's happening there, but Woolworths is certainly struggling and nowhere near its highs as Coles is. So that's really one for the interesting book, I think. But anyway, I'm not really concerned about that. I'm really more interested in Coles because that looks like to me it wants to go up, and it will be a good breakout if it gets out of that trading range. Okay, then we've got Suncorp. Okay, another stock that's been going higher very nicely indeed for quite some time. We had a developing trend through here. It had a resistance point up here at these highs. Let me just blow this up a little bit more for you so we can get a good look at this. Okay, so this is the resistance point here, these highs here. We've got a good break here, volume, momentum, and then we just get a simple new high. That's all it is, a new high. So we buy it and put our stop at roughly around 15%, somewhere in that vicinity. And then we start working from there. If it goes down, then we get out and it's like a small loss. But if it doesn't, it goes up. And this stock has now gone up from about $15. It's now over $20. So in the last year or so, that's what it's done, which is a pretty amazing performance. Trend intensity rating is still 10 for Suncorp. I don't know where it will go, but it still wants to go higher at the moment. So we just continue to follow that with our stop loss. Okay, Commonwealth Bank's another one that surprised us all with its new high, but again, it's so important. What I'm really trying to stress today is that when you get your signals, you've really got to take them. Even in these times here, when we were wondering about what the banks were going to do, surely CBA can't go higher. All these things we just put in our minds that give us a reason not to buy, but the signal is there, clear as day. A break to new highs, excellent volume, excellent momentum, and this stock has gone from $110 to $160 in about a year. So that is amazing for a leading stock. This rally has flown in the face of fundamental valuations, which means there are other things driving the price. Okay, so I don't really know what it is. All I know that it is, and all I know that it is going up, and I just follow this with my stop loss. Okay, so volume, momentum are all positive enough. The fact that the price is going up in higher highs and higher lows and above the stop is the most important thing to me. So that's CBA, trend intensity rating +8, just having a little bit of a corrective pattern here at the moment, having a bit of trouble at 160. It may be the top, I don't know, or it may go through and have another run. But all I know is the stock market will surprise at some stage with this one. So CBA is looking great. Qantas, another new high, two new highs here. It was a big resistance point back here for Qantas. And again, the market wasn't liking Qantas at all. You've got Joe Aston books coming out. You've got negative things about Joyce and about what they were doing to all their customers. But still, the price broke to a high here and broke to a new high here. And more going, can't possibly go higher. But it's gone from roughly $6.50 to now be nearly $9.50. So that's $3 in a pretty short period of time. A great gain. Trend intensity rating is +10 still. So it can still go higher. A lot of the stocks you'll see at the moment will have this lower volume. It's basically holiday tainted, Christmas, New Year. All those volumes go down, which makes it a bit harder to read, but it's only a little part of what we do. Okay, we also look at momentum, moving average, price action, and if all those signals are good, then we can follow it higher. So the two new highs here really were confirmation that this stock wanted to go higher, and it still is. So it's important that we jumped on that at the right time and not around up here. Okay, regroup, another one which makes new highs, fairly simple new high back here. It made a new all-time high, okay. It dallied about for a few months there, stayed above our stop. It's always a bit of a difficult one. All markets are different. Some go straight off, some don't. This one took time, but we were still in it because our stop wasn't hit, and the market's now gone from around about $177. It's now up around 250 almost. So amazing run by a regroup. Still trending high at +8, having a bit of a corrective phase at the moment. Okay, but still holding above our stop and looking like it wants to go back and test these highs again. So regroups, just another one of these big leading stocks that is doing very well. Aristocrat Leisure, this is just another stock that's doing well. I mean, these are amazing trends, that we can't really ignore. They occur, and you don't need to go to any other markets to get these trends. So why would you? You stick to your market, you stick to your trends, you keep trading your trade plan, and eventually you will get these for sure. Okay, so Aristocrat's trend intensity rating is +10. It's moving higher. All this market here, everything was flashing green here on the break here to new highs, new all-time highs, volume, momentum. So other stocks will come up that are coming up that will do exactly the same thing. Things will fall off, things will come in. It's the process that we follow all the time, and it's almost monotonously boring, but that's what it is. There are different markets. The current market is a great market for trending stocks, so we're making some money. There are some markets that go sideways, which makes it hard, so we've got to make sure we preserve our capital for times like these. Anyway, Aristocrat has gone from around about $48 to up around $71 in a very short period of time this year, which has been fantastic for us. Okay, Technology One is another one which we know about, had a huge run, has a bit of a correction here of late. Okay, so it all stops at some stage that the trends will end, and we just need to be observant and responsive to this and not get too thinking, it's going to go high, it's going to go high, we hope it's going to go higher. Not necessarily so. So it's a matter of being observant, knowing where your stop is, setting your stop, and when it's hit, you get out. So for the moment, Technology One having a little bit of a struggle, but it's back. The buyers are back on this one a bit again. We can clearly see some selling down here, shot across the bow, and then we've got some momentum here, which has come off a little bit. So there's a warning sign there. Trend intensity ratings come back to +7, still in the strongly trending zone, but certainly want to watch this one and make sure you know exactly where your stop is, okay? Because you have a big profit to protect, and it's important to do that. Okay, so that's about all the main stocks I've got for you today. The only other one I've got is Magellan Financial, which had a really bad time for a long time, and it came from right up here somewhere, right down to about $6. We found a base, and we got a higher low up here at about $8, and then we got a breakthrough here up around up around $10, $10.50, and it is now $12.40 and moving higher. Volumes have been tainted a little bit again, but they're all green bars. Basically, it's above the average. Momentum is good. So apart from volume, which we understand it can be a bit light during the holiday period, everything else looks good, and it's making new highs, and the price looks very good for Magellan. So highs at the top of what I'm talking about today, new highs, they occur all the time in a naturally uptrending stock market. Why wouldn't you buy them? There's no reason not to. Again, know that reason why you buy, and you'll know what to buy. And it's Magellan is it's a buy with a stop situation. It's gone through its resistance level here, a clear resistance level here, formed, we can call it an inverse head and shoulders, a rounding bottom, whatever you like. It's a transfer of control from sellers to buyers. The buyers are back in control, and the market is going up again. So that is Magellan. Okay, so that's most of the stocks I've got. So these are all leading stocks, as I said before. You don't need to look any further. They're much safer stocks than the small stocks from what I do. So they really are the simplest trades in the world to run. So again, stock market's not complicated. For those that ask me lots of questions about looking at different services and things like that, it's not a matter of looking at a whole lot of services, looking at one simple process you look at and focusing on that. You cannot build everything into a trading decision because you will get so confused, you will not know what you are doing. So just have a simple process, and a new high is one of them that I use. Okay, so they're the simplest trades, as I said before. entry levels and stop levels on the trading center to look at all the stocks there for entries and exit points. Look, lots more interesting stocks hitting and lurking below potential new highs on our trading center. We help you find trends, new highs, trend reversals, and show you where to set our stops. This is what we do. You can follow me, you can use me as a guide, whatever you like, but it's information and it's education on how a process works. And now we're going to look at a few numbers for you, because I love numbers, and I presume if you're in this technical analysis space, you probably do too. So let's go to some slides and have a look at a few of these figures. I'm just looking at my returns at the moment and how they're working and how they're looking and how you can run this in a smaller portfolio. So firstly, numbers and probabilities is what I'm talking about. Probabilities is what I'm doing all the time. Okay, that's why I wait for a trend to develop before I actually jump on it. I get a new high, it tells me the trend has been moving higher. I get these new highs, which is always a good signal, and then I can jump on these trends. And that's all I've done with these other ones. So I might have left some money on the table, but I haven't had no surety in there until I get that actual point where he says, yes, this trend, high probability that this trend is going to go higher. So, of the 158 stocks I cover, there are 42 trends and 116 that are not trending. Don't worry about the other stocks, they don't matter. Focus on the trends that you have. When trends are proliferating, like now, enough of them for us, 55 is plenty, it is important to maximise this opportunity. The numbers are important, and the gains that these trends are making are fantastic at the moment. Okay? There'll always be more, don't worry. Okay, so we run our profits. This is a breakdown of the 42 trend that I've got at the moment. There are 2 stocks generating more than 100%. There are 4 stocks generating between 50 and 100. There are 9 stocks generating between 30 and 50. 6 stocks generating between 50 and 30. So there are 21 stocks of the 42 that are generating plus 15% up to over 100%. Very good status. There are 10 stocks generating small wins between 0 and 15. New ones that have just come on board. So that leaves us with 11 stocks. So most importantly, we keep our losses small. There are 11 stocks showing losses in those 42 uptrending stocks that I have. New entries for the most part. The average losses they're showing is 3.3. The maximum is 7.3. Okay, so I'm always going to try and keep those small. Okay, that's important. So you can see from the trend here and the losses here, the bias is certainly to the upside of the portfolio, so we're making some good money. So the average return on the 42 qualified trends at the moment is 24.1. This doesn't always happen, but now is the time to make money. Average holding period is 174 days. So the annualised return is around about 50% on all those stock picks, which is pretty good. And it's what we'd like to see in this time at the moment when the market is moving so strongly. Very, very important to do. So numbers and probabilities again, if we break this down into a 5-stock portfolio, these percentages, you're going to look at 2.5 stocks of those 5 stocks. They'll generate between 15 and plus 100%. Okay? 1.5 stocks will generate less than 15%. And there'll be one loss in there, averaging 3.3%. So you can see again, the bias is very much to the upside. In fact, a lot of my 5-stock portfolios are looking even better than that. Okay, if I look at a breakdown of a 10-stock portfolio, so this is so 5 will generate between 15 and 100% plus. Small wins of less than 15%, and you'll have 2 losses averaging 3.3%. That's really the picture that you're looking at. And these are a fact of life, these losses, okay? So just work with them. You'll take plenty of them, but just make sure you chop them when you need to. So this is how the processes works with the probabilities, scaling down. So I know I cover 160 stocks, but for most of you, covering that is too many. So you need to fine it down into a smaller group of stocks that you can follow with a smaller portfolio, because you don't need to have 20 stocks in your portfolio. Okay. So behind all this, the premise of my process is the below. Trade outcomes. There are 4 different trade outcomes. Big wins, small losses, and big losses. Okay. So we simply cut out the possibility of big losses by limiting any loss to 15%. And that is a rule that I have. I don't care how good the stock looks, what I think about it, what anyone else says. If it moves to more than 15% down, I will get out of that stock. So I'm never going to take any big losses in my portfolios. Okay, so that's the premise behind what the process that I do. So I built on that premise, made some trading processes, and built a trade plan out of that. So that's where I started originally. Okay, so just to go through the portfolios as they're looking now, this is the 23rd of January 25. The accumulation index, which is the index plus dividends, is up 9%. Okay, remember that's carrying a lot of losses. So in the top 200 stocks there, the majority of stocks aren't trending. Okay, so there's still a weight there on that index. So I'd have to get rid of those stocks and I focus on the stocks that are trending up, and that's what I do with the portfolio. So the conservative portfolio, which is a very safe portfolio, I cover 20 stocks and only hold 10. I cover 20 stocks in my universe and only will trade up to 10. At the moment, I've got 9 out of 10, which is very, very high for that portfolio, and it's currently generating 11%. It moves between 9, 10, 11, around that sort of area. It's strong at the moment because the market's strong, but that's a pretty good return. If you can get that every year, then we're pretty happy about that, because interest rates are, not giving us much at the moment. 4.9 in the bank, 4.6, whatever it is. Cash management. So 11% over those years, 2003, 2025, 22 years, is pretty good. The 5 stock is currently has 4 out of 5. So we lost one last week and nothing came in. So it's at 4 out of 5. 16.8% still CAGR, which is good. The 10 stock has 8 out of 10 stocks in its portfolio. We have taken a couple of stocks out recently, which has been interesting. But they sort of seem to be back on board at the moment. But that's 80% equities, 20% cash, generating 12.8%. The Energizer 5 stocks that I started since August 2020 is generating 13.1, and the one that I started 6 months later, March 21, is generating 16.9. Just has a little bit of that bad period out of the March 21 one, but it's all full, those portfolios. Well, the 5 stock in August 20 is 4 out of 5, but they're pretty well full anyway. For the most part, and they'll be full again as new stocks come in. So those portfolios are generating good money. This is what the process is. This is what they've generated over the years. This is how it works. Good times, bad times, that's what happens. Okay, so that is the portfolios, how they're looking at the moment. So the newsletter, it will be out in the next couple of days, and I'm going to be showing all my open positions and how they look at the moment, and you can see exactly that, and I'll talk a little bit about that. I'm going to be looking at energy stocks. In Radar's rant, I ask why sometimes we have a hard time adjusting to a factual reality, even though we know them to be true. Okay, what I'm talking about is making the right decisions when you're trading, not emotional decisions, because we know them not to be right, but we still do it all the time. Why? Well, that's your call. I'll include our complete open positions, as I said before. You can subscribe to the blog, take a trial, and look at us for 2 weeks. Have a good look at us, see how we trade, see how we present all our information. And there are 160 stocks there you can do, and there's also a little watch list you can build of your own, which is you set up in your portfolio area of Stockradar, so you can monitor the stocks you are holding. Okay, the Pareto principle, 80% of your profits will be generated by 20% of your trades. When you're on a trend, stick to it. Very, very important. So always run your profits. You will take losses, but always keep them small. When you're trading, it is analysis in, risk management out. Okay, trailing stop. Analysis in, once I'm in a trade, it's purely a function of money management. So if you follow a process, you will take some losses and small wins, but on a consistently regular basis, you will also hit the jackpot in this sort of market. And you can see the percentages there of getting some good stocks there. The smaller the portfolio of stocks, the greater the effect on your portfolio. So my 5 stock, if I've got a stock that's doing really well, it's got 1/20th of my capital. 1/5 of my capital, because I've got 5 stocks, and I'm generating. So each stock has 1/5 of my capital in there. So on a 10 stock basis, that's 10 stocks, so it has lesser effect. So in a 5 stock portfolio, although it's more volatile, because of the high conviction we have on our stock picks, we make good money out of the 5 stock, better money than anything else. So remember, the stock market trends higher the majority of the time. Keep the emotions out and just follow the process is the way to make some money consistently. Okay, so that's just really talking about today about the market we're in at the moment, how important it is to make money in this market and be on song, follow your signals and do the right thing. Okay, so I hope you all have had a good week this week. It's been a good market. Remember to watch your trends, heed your stops, keep it simple, have fun, most importantly, stay safe. Okay, I'll see you all next week. Thanks very much.